Hey everyone, Tony here again. This time I'm going to review once more, turning this into a weekly thing, the S&P 500 using the SPY. So we're starting off with pretty much the same kind of drawing that I had for the last 2 weeks. So we're looking at the monthly, and obviously not much is going to change. It's only been 2 weeks that I've been doing this. This is the third week. So not even a full month has closed, but hey, we'll review it again. So as you can see, we have an uptrend. The uptrend was tested here, but we quickly resolved that temporarily. So let's see how that goes. Right now we have this pretty obvious bearish divergence for a couple months there, but it seems to have broken out of that, so we'll have to see how that resolves. But that's the main thing that I'm seeing here on the monthly. So we see that we had this bearish divergence, and it broke out of that. So, and it actually gave us a little bit of a structure. So let me move this down. So that, I guess we'll see if that ever, something ever comes out of that. But so far, I will just have to move on. There's not much you can do. Price will tell. So now that we are here, we have, let's just go straight into the weekly because we already spoke about that in the last couple weeks. So diving in here, we have this up. This is the main thing. So let's zoom in here on a weekly, by the way. So we are on a weekly. We see that we have, it's just like such a strong bull market for the S&P 500. It's kind of insane. But we see that we had this from this swing low to this swing high, we had a test of the 23.6 fib level. I was expecting it to come down to the 38.2. It might still get there, but you can see that it even broke past this trend line. So now we're on more bullish. Not only did we break it on the upside of that, but we also broke on the upside of this original steep trend line. It's just bullish. There's nothing else to say. I would actually just argue to take this. Actually, we'll leave it there until next time. See how it plays out. But we have this 20 EMA, which is the yellow line. I was expecting to probably see something there if it really was breaking down and it was going to be a bearish. For it to at least test this 382. That doesn't seem to be wanting to happen, but there's still time. We're on a weekly. I forget that we're not on a daily here. If we go back to the monthly, I think there's something that I forgot to mention. But if we zoom out, so you can see that we have this very clear, basically, uptrend in price. However, we can see that volume is dropping. So it's kind of interesting to see. So we'll see what that leads to. But I mean, that just could break bearish or could break bullish. It's just so toppy that it's easy to say bear, but it's been such a strong market that it's can't go against the trend. Trend is your friend, as they say. So we're back on the weekly. We see that we had a test here of the 200 EMA. I don't see us anytime soon testing that 200 EMA. That was back in December 2018. And ever since, we've been pretty much obeying the 20 and the 50. Even with this little break here, we never even tested that the 20 EMA. So let's go into the daily now. Oh, I just saw myself here. So I'm against a white background, so my shirt's white. Didn't think about that one. So it looks like I'm I'm ghosting on you. So I apologize for that. It's no biggie. You're not here to see me. You're here to see some technical analysis, hopefully. And so we are on the daily. And once again, we have, I'm going to take this, this trend line and just redraw on a daily. So the RSI is interesting here to me because we have, this would have been, or this was really the break. So we had 1, 2, 3. So we have a confirmed trend line, and then we have the break here, which happened obviously with the break of last week. I think it was last week, was it? 1, 2, 3, 4, 5, 6, 7. Yeah, week and a half. So we have that break, and even though we have the higher high in pricing in the last 2-3 days, we've had lower highs in the RSI. So that is, to me, that's interesting. So we have higher high. Let me draw this to make it just a little clearer. So we have higher high there, yet we have lower highs in around the same time frame. So we got to see what happens there, but it's not a positive. I'll tell you that for sure. We have to see if the market keeps pumping. It's just initially it looks bearish, but again, don't want to go against the trend. But you have to keep an eye on it, especially here on the daily. We have to keep a close eye on it to make sure that we're not overextended. I still think that there's a very likely chance for a pullback. So if we draw to today's high, we can see that 236. I guess we could test that again. The 500. I keep on to say 500. The 50 EMA is right there. The 23.6. I would honestly prefer if this is a healthy bull run for it to come down, test at 382, and then keep rallying. The 200 EMA is right above the 618, the 61.8 fib level. That would be a heartbreaker for a lot of people if it does come all the way down here. But hey, it's possible. That would be a drop of approximately, what is that, 10%? Nothing crazy. Yeah, I mean it's nothing out of this world, but that, you know, there's 10% of that stock market. That's crazy. So let's go, and so if I were to guess, and this is just a guess, no guarantees or anything, most likely we're looking at a retest here pretty soon, especially if these bear divs come into fruition, and we can probably extend that down here to the 61.8. That's a target of anywhere between 300 and 325, give or take. Yeah, it's pretty big, but hey, we're in the 334 region right now. It's just we continue to have these divs, and it keeps pumping up. So it's hard to give you like a very confident answer. And I'm just, to be honest with you, I'm not confident in this. And just the technical analysis says something, and then it just keeps pumping. So we have some, let me see here. We had a little bit of bearish divergence there. It had it. We had an actual reaction to it, but then it's been pumping. We had this bear div here. Price didn't budge much. We continue to have bearish divs and continue. So I want to say technically we are due for a correction, but just because we are due doesn't mean it's going to happen. So if we look at this general section here, so here we basically have divergence from here to this price range up here. So from, let's say 312, give or take, all the way up to, bear with me, I know silence is pretty here, but up to 322. And then we continue to have divergence there. So from 322 up to 325, give or take, 324 and a half. And then we continue to have higher highs, but lower highs in RSI. We did have that correction here, but now we have another new high and yet another lower high in RSI. So technically, things that are showing that we're due for it. RSI divergence, I say, would be the most critical one, the most important one. Stochastic is in the traditionally overbought section. Overbought regions, I've said it in multiple videos, if not all of them, doesn't mean that it's actually overbought or oversold. These regions are just kind of like a guideline, and price, not price, but the actual oscillator can stay there in overbought regions for a long time, and it just means that the stock is, or the asset is just strong. So, just because you see something in overbought zones, over 70 or over 80, doesn't necessarily mean it's going to roll over. It just means that it's the trend is strong, and you have to kind of work with it. So don't blindly use those, like a lot of people say, use overbought regions to just sell. You want to use confluence. You want to use a combination of RSI stochastic or MACD or what else? The Williams percentage R. And then a lot of these things just tell you the same information over and over. So you want to see price action. You want to see these trend lines, which for me is one of the most important things. So break of trend lines, respecting the EMAs. So in this case, for example, you see that it broke, but then it acted, the 50 EMA acted as support, and then it bounced off of that. So that was a beautiful entry. If you were bullish on the S&P, and it's hard to go against it again. But when you see all these things working together in just, it's not even in your favor when they work together, it's just, don't go against it. This is not about what you think. This is not, and yeah, you can have your fundamental reasons for believing in a stock or an asset, but just make sure that everything is in your favor. So it doesn't make any sense to do just fundamental work and then just dive in and not know where buy at a high without just doing some basic Fibonacci and just saying, hey, look, maybe this is an insane bull run. Maybe let's just wait for a pullback. Things eventually come back to reality. I mean, there's going to be a correction at some point where you can buy in if you're bullish on it. It also doesn't make any sense to just go technical and not look at fundamentals. So even though you can make money, it's not the wisest thing. So you want to combine fundamental technical analysis and respect charts. Respect, I'm not a huge fan of paying attention to the news and the media, but there are things that affected the market. So like coronavirus was one of the things that's a big fundamental event, I guess you could say. Another thing is at the beginning of the year, the Iranian, that threat of war that happens. I mean, that is going to affect. So the news is important, but I don't focus on it too much. For me, as long as I have a fundamental, strong idea of a stock, or I just believe something is good. Apple products are great. So it's, for me, fundamentally, just the simple fact that I know that I want to buy that product. It's good enough fundamentals for me. Obviously, that's not a market cap. You want to see price to book, earnings per share, that kind of thing. You want to make sure that fundamentally it's a strong asset, and then it would be doing yourself a disservice if you don't look at the technicals, because the technicals is going to give you it just gives you so fundamentals. If you only look at fundamentals, you have a good idea, but it's kind of like a blurry picture once you add technicals to it. And this goes the other way around too. If you just look at technicals and you're not really sure about the fundamentals, it's still kind of like a foggy thing. It's like you're just going to buy a stock blindly because the charts look good. And a lot of people do, and a lot of people make money, but doesn't it make a lot more sense to look into why you want to buy this? It just kind of makes sense, right? So it just gives you a better idea, a better view. It's a clearer picture when you combine fundamentals and technical analysis. So anyways, sorry for that little rant. But here, I mean, we just see that it's respecting it. It keeps bouncing off the 50 EMA. Well, here we had some breaks. We had some. This is the strong. I mean, ever since we had that since October, it burst through the 20 and the 50 EMA. It's respected the 20 a bit more. Here it broke through, but then the 50 EMA was respected, and it just completely bounced off of that and blew past the 20 EMA, blew past this trend line, and it's above the trend line. So we have to see if it keeps going. What we could do is two things. We can see if it is truly a bullish run, where will it likely go? So first stop would probably be 340 region, between 340 and 346. The 1.618 is always a target. I mean, that would be the best case scenario. But the realistic next bullish zone would be between 340 and 346. And let's see if we can get some confidence with that if I do a different type of... So yeah, 350. So first stop would likely be, it depends how aggressive you are. I mean, we're on our way to that 1.13. So I think a likely target would be between the 1.272 and the 1.414. So yeah, the little sweet spot of 346 and 350. 350 being kind of like the closer of the two. So 350, if this keeps being bullish, we might get there. If you have your IRA and the S&P 500, you definitely want that to happen. So that's where we are with that. I don't see it breaking down unless it breaks past past the 20 and the 50. And even if it does, we have, let's return this to the regular. So it could go all the way down to this 200 EMA, and it still would be bullish because you're above the 618. I would only stress about it if it breaks the 786, which is this longer term trend line. So if it breaks 786, meaning it also breaks this trend line, then yes, that would, I don't know if I would say I would freak out, but that would be a substantial loss of almost 15%. So yeah, that's basically where we are. It's hard to say. Technically, it's easy to want to say it's going to break down, but it just keeps pumping. So if it's able to maintain itself in this trend, I would say 350 is a nice little target. If it breaks down, I would like for it to see a bounce between the 618 and the 382, preferably the 382 for it to be a nice little healthy bounce. So I'm looking for a bounce, if it does break down, between 300 and 315. If it goes below that and it breaks past this trend line and the $300 mark, I would, I think that would be a more obvious sign of a downtrend. It still wouldn't mean that it's crazy bearish because we have this longer trend line here. Let's see if we go back to auto. You can see that this, I think that's, maybe that's not a trend line. Yeah, I would just end it there pretty much for this analysis. So I have if you're bullish, a target of 350, give or take. If you're, and it might bounce down to the 382, the 315 to 300 region before it gets to that 350. That's very likely. It's just we have to take it day by day in this case. If it breaks down this trend line, 786 to $300 range, then yeah, I would say it's more of a gloomy scenario. But hey, As long as it keeps pumping, you got to keep going with it. If you like this video, please like it. Subscribe if you can. If you have any questions, any suggestions, any ideas, anything, let me know. Love to hear from you, and have a great one. Bye-bye.